Yo guys, what's going on? Welcome back to another weekly forecast, and in this video I'm going to be explaining how we caught 660 pips in practically a week, and that was just trading gold. Let's get into it. Right guys, so I'm here on the free channel, and you can see, if you guys are following the free channel, you know that we call these moves before they happened. There's no sort of replay doing here, you know, we don't do any of that stuff, and we call it step by step. I've given breakdowns, and this is sort of the stuff that I kind of give on my VIP a lot more, with sort of when to enter, when to exit. You can see that these are the sort of the trades, the way it is sent out. It's like a buy limit with an SL, and you got TPs, and then an explanation on how I'm gonna how long I'm gonna hold it, and then you can see that the trade was activated, and then I was setting the targets. TP1 and TP1 and TP2 got hit overnight, and then you can see that price was on its way to TP3, and then we extended that take profit because we knew we had that. Since we were getting that move, you might as well sort of rinse majority of the market as you can. So that is just a quick explanation on how VIP is currently differing to the free channel. You can see the free channel here. I am sending my analysis here because I do want to sort of give the free channel some sort of content, and it'll, you know, it helps me a lot if you guys just sort of just react to these images and these posts. If it really helps you, because it just shows me how many people are active and how many people are sort of just using this as a platform for, you know, just education, learning, and just add some analysis for gold, really, because trading gold is hard as it is, and it really just helps just looking at someone's viewpoint, just to give you a reset when you're sort of looking at the market and a clear vision on what you're looking for towards like on that day. But without further ado, we're going to quickly jump in and explain how we ended up catching 260 pips on CPI, and this is the trade here. Once I can find it, there we go. So you can see that price ended up pushing down into an imbalance area, and then from that imbalance area, price went and attacked the previous high. And you would like, always, how do you know that it was going to go down? It's CPI. It went up first, came all the way back down. How did you know that it was going to go up? How do you not know that it was going to keep falling down? And that's what I'm going to explain here today. And I'm going to sort of break down the other trade where we ended up catching 460 pips. 400 pips from this level all the way to this level on Thursday and Friday. So you can see, obviously the main move was on Friday, but the setup was on Thursday. I'm going to explain this. So it's going to be a little bit of a longer video, so I hope you guys enjoy. And yeah, let's get straight into it. So I'm going to switch over to the chart here, and I'm going to use replay mode just because it helps me explain without these unnecessary candles. So I'm going to set the replay mode here, and then we're just going to get our bearings and just see where price is at the moment. Right, so price at the moment, it's Wednesday. We have CPI at 8:30 New York time, which is about, how many hours away now currently? So it's about 3 hours away from where we are at the moment. So we're going to quickly just look at the time frame, look at the charts, and just see what's going on, and just break it down for you guys and see what I was looking at step by step as price was sort of doing this. We can see that, as I explained in the last weekly forecast, we had a move up, right? What you want to see is you want to see a sort of retracement, and we ended up getting that retracement on Monday. I was expecting price to push a little bit lower, just to sort of fill this sort of gap in here that we have on these two candles, but price wanted to turn around on Tuesday, which it did, and it pushed right back up with Wednesday London session as well to around this level. If I get a fib out and I mark this to here, you can see that this is no sort of joke here anyway. You can see that it makes clear sense that when price moved up in an impulse, price retraced less than 50%, which means that price is in a discount area. So anything from 50% and lower is a good area to buy. I see a lot of people who start saying, oh, is it going to go up from here? Is it going to go up? Is it going to go up? Why would you want to buy here when price could, in fact, tap into this sort of 50% discount area and then retrace? You want to buy at a discount. You never buy anything that's almost like at expensive price. You wait for the price to become cheaper. When you see a 50% deal in the supermarket, you want to obviously say, okay, this is a good deal. The price is 50% off. I'm going to buy it now, which induces supply, and then price ends up you can see the price. This is a good area to buy. So that was my sort of first viewpoint. I can see that price has turned around from that level, right? We didn't get a buy opportunity here because I was waiting for CPI, and I wouldn't buy a day before CPI anyway, because I'd rather see what happens at CPI. It could be manipulation. So we see that price as it ended up pushing up towards these highs now. The first level of liquidity I like to use is previous highs. These are sort of classed as buy-side liquidities, because I know that everyone who's selling will have their stop losses above here, and anyone who's buying would have their stop losses here, right? But which way is the trend currently going? You can see that what we have is we have price move down, has moved down lower, accumulated all the buy orders, broke structure as I explained last week, came back to retest, and then we had an explosion towards the upside. It's broken all of this structure now, right? Which tells us that right price wants to move up. What has it now done? It's retraced 50%, and now it's pushing back up, right? So this tells us that the target is this high, and then we'll get structure, and the next targets are going to be these highs, right? So they're the main liquidity targets on this whole structure when price turns around. Obviously, price could then, you could have an example where, always, how do you know it's going to start attacking these highs? But then you just see what price does. If price then pushes down and breaks this low, then that then tells you that it won't be attacking those. It's trying to turn around, and now it's going back for these. So you got to let the market give you that to show its hand to you on which way it's trying to go. But right now on a higher time frame, this is on a 4-hour time frame, and it's giving us indication that on a 4-hour time frame, it wants to go higher. So you just target it in the way that you know that whole saying, trend is your friend. Just follow it. So you can see that price has retraced 50%. One thing I do want to show you, which is also interesting, if I click escape on here and go to the daily time frame, why did price slow it down here? Usually I would look at the daily time frame and you can see there's an imbalance here. This is before that down close candle was printed, and when it did, price tapped into this imbalance at 50% of it, which is a good place where price usually rejects, and it also used the previous order block, right? The order block was from here. This is where the order block starts from, because it's the down close candles, and it goes all the way down there. So if I get rid of this box and I bring this box across now, there's your order block. So prices can't come back to retest that. I sent this on the Telegram saying that price will be using stepping stones, right? Obviously this is the latest setup, but this is the stepping stone. Prices come back down. It said, right, it's done enough, 50% retracement. I would like to push up now, because it had higher targets for the rest of the week. Okay, so you can see that, yeah, that 50% retracement, and now price is pushing up. Right, let's get to the fun stuff now, and let's look at the whole CPI release and what we're looking at. So now I've explained that that is my target, and that's what I'm looking at before CPI. I would like to see this taken out. I'm going to drop down to the hour time frame. You can see what happens to price action as price is getting closer to CPI. Okay, CPI has now just triggered. This is a CPI release, and price has now, what has it done? It spiked that high that I was looking for, right? But at this point, I was like, price is now pushed up from here. I was thinking that price may get to this imbalance area here. So what I like to do is on the 15-minute, I like to look for little imbalance areas. If you took a buy from this imbalance, you would be in profit, right? That's exactly what I saw when the market opened. 200 pips in profit instantly, right at CPI release. SL could have gone below the previous low, just take the trade. Why? Because price is pushing up. This is your liquidity target, and price has dropped about 200-300 pips on its way down just before the release, which means that it was heading to this area, collected the buy orders, and once when release hit, boom, it was a discount. Price then attacked the liquidity high. So now at this point, I was thinking the trade. See, I'm going to go through my mindset on what I was thinking at this trade because a lot of the time you can end up having trades, but you won't actually know what the trader was thinking at the time. At this time, I was thinking, okay, there's no trade now. It's already collected my liquidity, right? But what's happened is that after, if I give another 15 minutes, price has tapped this high, and usually when I look at a previous high taken, I would like to see price tap that again, right? So what I'm explaining is if you see a high and then you see price take that out again and then turn around, This is a usual reversal pattern I look for. Why? Because we have initial liquidity created here. The people who are selling would have their stop losses above this level. Price takes them out and then says, now it's time to sort of move down. If I see a move where price says attack the high first and then just stay below it and then falling down, I know that all of this is liquidity that's been engineered that will eventually get taken out, which tells me that the price is not done yet. So once I started seeing this with CPI, after we had that, we had this high here, and then we have all of these that were then created as price was going down. So I was thinking, we know that the usual time that we enter is 10 a.m., right? The current time at the moment is 9:15. So we still have possibility to enter the trade again. Let's see what happens. The same thing happened here. You can see that this low was created, our price went all the way up, and we have this high. So we have the two liquidity areas now, and price has not really cleared the liquidity level. Normally when we want to see a clear, we want to see price actually push up 10-20 pips and then reverse, but price has only just spiked it. So this is giving me those confirmations that maybe it's not done. So let's see what happens. So I'm going to push it forward. You can see price is now dropping, retraced. I ended up taking a quick buy position here because I was still looking for that price to push up, and then we ended up getting into like profit. I think it was like 10-20 pips here, and then price then ended up going back to SL. And this is honest truth. Obviously we end up selling this stuff. We don't hide from our losses. We took it here because I was still trying to attack these highs, and sometimes you do get this retracement to attempt it. It looks like a breakout structure, go for it, and then price ended up ripping straight through. If you go back to the chart, you can see that price is ripping straight through. Where is it going, right? Let's go back to our 15-minute time frame. You can see that we have equal lows. Low, low, low. This is where people are placing their stop losses if they're buying. So this is where I'm going to be waiting below that, because I know that the market will come back to attack this level, because it's liquidity creation that was created before the release, right? If I mark this a relatively equal lows, you can see our Tuesday for 7 p.m., 8 p.m., and then it was Wednesday. Price has still left this, which they know that on Wednesday, when market opened on the Wednesday, which is the CPI release day, which is around about here, they pushed the market up, danced around a little, and then if I forward it down, look at that. Price is now collected that liquidity, and where were we waiting? This you can't make this stuff up. Find the imbalance and then move it across. Now let me zoom in and I'll show you what exactly happened. Let's make this cleaner. Now look at this. So explain to me why price tapped into the imbalance below this wick in this gap from here at 52, where my buy limit was, and rejected from 52 to 58 in a matter of, say, like 5 minutes. Yeah, 5 minutes. We get 70 pips in 5 minutes. So that is CPI manipulation at its best, right? We know that prices now, it was dropping before CPI, took out the early sellers. If people wanted to move their stop loss above this one, took them out first with a little spike above. The sellers are done. What happens then? The market drops. People are then going to say, oh, it's going to sell, it's going to drop, it's going to drop. They're entering sells here, right? So now they're in sells. Okay, they may be in profit. We don't know if they're closed. But what ends up happening after another 15 minutes? Price is then coming back up. It's then coming back up. It's then coming back up. So all of these sellers have now been trapped, right? They should have closed or something, but they're now trapped. They think that, oh, it's just a retracement, it's going to go down. Which way is the trend going? This is what you need to look at this point. At this point, we know you don't want price to attack this. We want price to push up towards these highs. This is the higher time frame stuff. We also know that on the 5 minute time frame, or on the 1 minute, which looks a lot better, we have these highs here. Remember when I said that price will create that sort of down, 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 move down, and then take out all of those highs. That was the pattern I was going for, and that's exactly what happened here. You can see that price moved up, created liquidity, dropped down to its actual place where it wants to reverse, and then now it will just go and target that move. Why? Because look at the time as well, 10 a.m. This is when we get the nice moves that we usually get. What happens? Price dances around a bit, and then we ended up getting, boom, target hit. Actually, there you go, target hit, because I know it's like a bigger break. And what was that? From 52, which is this box here, clean snipe, price never went into drawdown, and then we got around 260 pips. That's where I closed the trade, right in the green line. And that's all you need, and that happened in an hour and 15. So that was the first initial trade. I hope you sort of got some value from me breaking that down. And I was very excited to break this trade down because that was a fantastic trade. And let's go to the next trade. So I'm going to exit replay mode from now, and then we're going to move on to the next trade. So the next trade was a trade that was taken, which I explained after the CPI release. We said that there's going to be stepping stones, right? We have the initial stepping stone, which was from here. You can see price tapped it, moved up. We have another order block which is created with CPI now. So if I drop down onto the 15-minute time frame, I said that we have this stepping stone. This is an order block where price is taken at a previous low, and now we drag that across, and I'm going to put replay mode on here. I said that I'm expecting price to, there you go. See, I call this stuff. I call it here, so you guys know, and this is on the free channel. So if you guys are not in the free channel, please click that link in the description and join this free channel, because again, it helps me a lot to know what people are, you know, they're getting the value that they need. And if you're not, if you want to get those guided entries with those SLs, the VIP is the place for you then. So again, I'm looking for another stepping stone, right? So I'm going to go back to this and look at what happened. So the first thing I did was go on the hour time frame, right? And I'm looking, where can we enter? Where could price possibly slow down? Usual thing, get the fib out, mark the impulse move that you have, right? You have 50%, which is here. And this is exactly how I analyze. I mark the 50% because I know anything below 50% is a good place to buy. I also then look at, is there any imbalance on the hour time frame? Is there any gaps? If you guys don't know what imbalance is, please go do some research. ICT's got a lot of videos on what imbalance is, and this stuff works, guys. It works if you apply other factors, and I explain that in my VIP. Imbalances don't just work all the time. You can see this is an imbalance right here. Now, technically this one worked because you can see once it tapped in, it went up, but then it came back down to another imbalance which was hidden. This was an hour imbalance. So if I go back to this, I'll mark this as an imbalance, and I'm going to bring it across, right? For me, I don't see any other imbalance on the 1 hour time frame. So what I'm going to do is I'm going to drop down to the 15-minute, right? On the 15-minute, I see all sorts of imbalance, right? So just mark them because it could help. It could not help. You know, it just depends on where price wants to sort of tap into at the time, right? So yeah, mark this as a 15-minute. I'll mark this as a 15. So what price can do is it could spike into these areas. It doesn't have to sort of close. It could spike into these areas and then just reject back a little, and then that shows that it's still valid. It's still respecting these imbalance areas. So I'm going to sort of bring this across. So now this is my area to enter. Why? Because it's below 50%. There's your imbalance areas. See what happens, right? Price comes down. We're looking at, say, US session for entries. What time is it? 8:45. Price is coming back into this area. There we go. 9:15. Price is tapped into this area, rejected up. And I'm not going to see that we didn't try and enter, obviously, at this time. We did. We entered VIP around about here. So I was looking for an entry around this level, and I gave it an attempt. But what ended up happening is price consolidated. Let's say we had an entry here. SL would be there, below the previous low. If I give it another 5 minutes, oh wait, no, it was right about here, sorry. There we go. So we got price, ended up pushing up here, and we were in profit a little. But then what happened is that price just danced around for 5, 10, 15 minutes, and then what did price do? It went towards that SL. So you can see that we were just in consolidation. Price here at SL, right? So I'm out at this point. Let's delete that. But then it's still valid, right? I just need to see that break of structure. So I said to the group, and I said that, okay, if price breaks these highs, I would likely look to get again. This is getting again because I want to see that break of structure. What ends up happening? Boom. An hour later, around about 4 p.m. UK time, 11 a.m. New York time, price has now broken structure, right? And price has broken structure quite a lot because it keeps going up. Give me one sec. Sorry about that, guys. Now, what am I looking for? The same sort of thing. We look for a retest to go in again, right? We have a break of structure. Can I remove this? Right. So the first thing I did was say, find an imbalance area where I would like to enter. Right. I know that price is now broken structure. The only way is up now. It's used it as a stepping stone. It's given it a hand. It's given it a little late, but that's what it does to try and catch people out. It thinks it's not going to do a move. It's going to try doing a move later on. If I look at the hour time frame, look at where price is rejecting off. 15-minute imbalance, 1 hour imbalance, rejections, and price pushes up. 50% is a good place to buy. It didn't reach here. That's so what? We've got other areas where it can reverse. And the same thing applies on the daily time frame. Price is using as a stepping stone, sorry, the 4 hour time frame. Remember the stepping stone? It's using it as a stepping stone. Same sort of thing. Price bounces off. We have a down close candle. What's the price doing? Bouncing off. It's continuing where its target could be these highs. And the quicker it does it, the quicker it'll get there. So we quickly let's speed this thing up. I had a buy limit in this gap here because I know that price usually fills the gap. I'm not going to rush in and buy here. I might as well just put a buy limit. The SL would be around about, say, 72. It's like a 50 pip SL. Leave that gap in because it was an overnight trade. And then let me click a buy at, like, say, 20. Yeah, just because. Oh, no, I bought now. Oops. I don't know how to do a buy limit. Oh, I do. Let's put a buy limit there. I've never really used this. Oh wow, as price comes down, I'm going to buy anyway. So I left it, I sent a buy limit on the VIP channel, and that was a buy limit I showed you earlier, which is the one that ended up hitting overnight, which is this one. Buy limit 77, SL 72. So it was a 50 pip SL. I was happy with that. I might as well just give that sort of space. Okay, cool. Oh dear. Either way, I'm just going to leave it like this. So we have this imbalance here. Price tapped into it and then pushed up a little, and then overnight price fully filled it. Our SL was below this low anyway, so we still had that sort of gap. And then what did price do? Instantly price carried on pushing up, and then you had TP1, TP2 taken out, and then our target was TP3, right? So then what did price do? Took out TP3. That's already at 200 pip, right? So now that we know that this has happened at 200 pips, and this was right when US session started, it gave me hope that price may continue, just keep climbing towards the next liquidity. People are going to be selling here and say that, okay, this is a good time to sell. It's taken at the high. But the thing is its main target on the higher time frame was this high. Everyone would be having the SLs above this high and this high, right, when they're selling. You know, price is using it as stepping stones to keep climbing, keep climbing, keep climbing, keep climbing. Where is it trying to go? Just follow the trend. I don't understand why people are selling when price is moving up. The inflation rate was a bit dodgy, so it will sort of react based upon it. We have mixed data. Just sort of follow the trend. That's what price action is all about, and this is why price action trading is very, very key when you sort of want to just follow the trend, really. And you can see clean price action. Price broke the structure, retested it, and then continued up. If it wanted to continue down, then that would be fine, right? But then we wouldn't be looking to buy then. On Friday, what we could get is we could get price continuing lower, but that's okay. So risk that you're willing to take, but more often than not, you have a what? Look at this risk to reward, 1 to 8. You risk 1%, you would have made 8% on this trade if you never took partials, obviously, which we normally do. But as a solid person who just knows that it's going to get there, you have 1%, and then you would have made 8% from that trade. So that was a breakdown on that trade. I hope you guys enjoyed it. If you did, please leave a comment on what you found most useful or something, or what you learned for today, and what you sort of going to take into tomorrow for trading. But look at this one thing. We have a volume void here. There's a gap, right? If I bring it across, that's where price started to turn around, which is quite interesting. So thought I'd just mention that as well. So you can see that price action, it's very key when it comes to trading, and you just need to take it step by step. So this time I'm gonna go into next week's forecast, and you guessed it, probably it's gonna be the same thing, and we're still gonna be attacking those highs. I haven't changed my bias yet because price action has not given me that reason to change my bias. Why? Because look, high, lower high, high, lower high, another high, lower high, another high. So what do you think is going to happen here? Yep, lower high, and then another high. Why? Because this is still intact. This has now been taken out, but there's still one more. So I'd rather target that one. I think that's where it's trying to go. On the higher time frames, we have, it looks like this, right? So what do you think it's going to do? It's very close there. You might as well. I'm not looking for any sells other than all-time high being taken out next week, and that is what should happen. I'm very confident that it should get taken out. If price wants to turn around here, I'll only change my bias if this low gets broken, 23.70, right? So if price pushes all the way back down here, it's going to look a bit weird unless it's sort of manipulation and then it tries to sort of go back up. That is what it is. But then you will understand that, you know, it's manipulation. Why is it not going lower? Why is it still moving sideways? It's because it's doing some dodgy stuff with the news. We have news towards the end of the week. If I pull up my Chrome here, we have news on Wednesday, Thursday, Friday. So this is the main part where we're likely to get those moves. We could get retracement Monday, Tuesday, and then Wednesday, Thursday, Friday will be that move back up. So that's what I would like to look for. So the first thing I'm going to do is mark my stepping stone again, which is from this daily candle. I move it across. I'm going to go drop down to the 4 hour, see if that's sort of valid. Right. That looks good. Okay, so we have this as our stepping stone, right? The next thing I'm going to do is find the impulse. The impulse goes from this low to the current high. If price moves up a little on Monday, then just move it up with it. If it takes out the high on Monday, oh, that's a different scenario actually, I just realized. So if price moves down on Monday, I would like to see price tap into this 50% level, anywhere below 23.96, and obviously VIP will get that guided entry when the timing's right, when the strategy is lining up, and how to get that sort of tight SL. But I would like to see price push back down into this area to then go where? To then attack the highs, right? Yeah, okay, you can see that price is now looking to reverse. I would like to see this on a Monday. Okay, so that's one scenario, very clean, easy scenario. From here, when price is above this all-time high, we don't know how high it'll go, right? If it wants to continue going up, let it keep climbing until you see that reversal. What price could do is it could spike the all-time high and then swiftly push down, right? And then you can catch the sells. Usually, your best sells would be above here, above this high, if you wanted to sell, but don't go and think that will immediately reverse, right? Don't just start placing sells as it's above here, because price could keep climbing another 200-300 pips because there's nothing to the left of it, and then it'll eventually come down. So I'd wait. You always wait for that sort of that confirmation. And again, if you guys are in sells now, because I know there's a lot of people that start saying, oh, I'm in sells, I need help. When's price going to reverse? If you guys are in sells now and you get an opportunity to see price come back towards this area, you get out those sells regardless, because you want to be in a better trade and you're likely making double that money later. So I'd monitor that. I'd see how that goes. But pretty much that is the breakdown of gold and the weekly forecast. So if you guys enjoyed, don't forget to subscribe. I know this. If you made it this far, congratulations, because I know I tend to ramble a lot, but this is valuable information that I would like to give you to you guys for free. So if you guys enjoyed, please leave a like, leave a comment on what you learned from this video, and that's who I know who's watched this video. You guys are the true legends. You've watched through all of this video. It's quite a long one. And don't forget to subscribe if you haven't, because again, although you tend to see these videos that I share on Telegram, it just tells me how many people would like to sort of stay with this channel as it grows. So just to recap, I'm looking for a price to retrace into this area and then attack these highs. If these highs are taken out first, right, we want to see that, so let price continue going up, wait for that structure break, wait for price to start slowing down, and then start to sell, right? Because we still have this as a target if price doesn't come down. So we have two different things. I will I will let you guys know on the free channel. So if you guys are not in the free channel, please join. I'd like to see that numbers grow. We are at what number are we on? 2,465 at this point. Let's get this to 2,500, and then our next goal will be to 3K. So guys, join that free channel if you can, and that's pretty much it. So I hope you enjoyed this video. It's been Always FX. Peace out.